Hello, Fredak, Fred ACC. Alrighty. Hopefully you'll subscribe, start picking up on what I'm sharing. I wasn't planning on getting out here by the pool today, but I was compelled to. So today's discussion is going to be about day trading. Day trading, more importantly, the cost of doing business. This applies to almost any kind of investing that you're going to do. I'll try to keep this from being long-winded. First up, I'd like to thank you all for being here. This is not financial advice. These are just some of the ideas in my head, things that I've learned over the years. What I have noticed, what I saw earlier this morning, is that there is so much fluff being portrayed out there. The spewing of what's out there and the shilling. Beyond pathetic. So, first thing on here is you need to do your homework. You gotta do your homework. Gotta check everything out. Gotta check Fredak out. The stuff that I blabble to you, is it accurate? Might be, probably is, but you need to do your homework. Alrighty, so if you like what you're seeing, please subscribe. Hit, smash, do whatever you want with the likes button. Cloudy day today, but I'm out here because I was irked by what I saw earlier this morning. So, this is about day trading, and it also parallels over into the crypto world, the cost of doing business. It's an important aspect. Because the bottom line is that the less cost of doing business for you means the more money in your pocket. Right now, the crypto world is unregulated. So there's spreads, there's things that are out there. The one thing that I've learned in life is that there's no free lunch. So if some site is offering free trades or free pretzels, they're probably overcharging for the beer that they're selling at the bar because the pretzels are nice and salty. Just the way of the world. Okay, so let's talk about the day trading world. This is important. How does it all work? Okay, the way that it works is that all of the entities that are out there are in business for one reason. And if it's the pizza place, if it's the local hospital, if it's the National Enquirer, whatever it might be, the number one goal is to make money, pay the bills, pay the employees, and be profitable. That's what Merck is in business for, IBM, NVIDIA, the New York Post, the Daily News, A to Z, you go across the board. Alrighty, as I've said to you in the past, it's one and done. Fredak doesn't sit here and script this stuff out. I don't sit here and do retakes. Please subscribe if you like what you see. Digest it. If not, in one ear, out the other. Nothing gained, nothing lost. Okay, with that being said, the day trading world. The way that it works is that years ago, it was T plus 3, which was regulation Reg T. That was from the Federal Reserve. If you bought some stock on a Monday and you sold it 10 minutes later or an hour later, your money was locked up for 3 days. Trade date plus 3. Then the institutions out there realized that they could create this thing called a pattern day trader. There used to be a lot of papers that you would fill out to show that you were suitable to be doing this. Otherwise, if you took a bath and you wiped away all your money, day trading in and out of penny stocks, you couldn't turn around and sue the brokerage firm for allowing you to do this, because there's something called the prudent man law, which you're supposed to, if you're a part of the financial world and you're licensed, you're not supposed to be putting people involved with things that are too risky for them. If you're 88 years old, you're not supposed to be buying some 3 cents penny stock. So, with that all being said, they created this thing called a pattern day trader. The way the pattern day trader works, and I believe now the Reg T has been lowered, it's understandable, T plus 1. But as a pattern day trader, if you have $25,000 or more in your account, I don't think there's any more papers to fill out saying that you're suitable. You have many years of experience with bonds and options and this and that. No longer there. And I think the trade, it's Reg T is trade date +1, and your money is cleared. So you can rebuy something and sell it a minute later, an hour later, next day, whatever. The pattern day trader gives you the ability as the investor, if you have $25,001 in your account, they will give you 3-to-1 leverage. So you will have $25,001, you will have $100,004 to buy any stock you want with, provided that it's above $5 and it's not on some list of things that you're not allowed to go near, which is very few, somewhat. Most of the things out there, the big name stocks, you could be purchasing. You can buy it, own it for 30 seconds, sell it. You could buy and sell 200-300 times a day with the money, as long as you don't dip below $25,000. If you have $25,001 and you buy something, you sell it right where you bought it at, but you happen to lose 1/10 of a penny on your 1,000 shares, and you're below 25,000, then the system will automatically restrict you from using the 3-to-1 leverage and the ability to buy and sell, buy and sell, buy and sell. Okay, so that's the pattern day trader. With the pattern day trader, it gives you the ability to go in and out, in and out, in and out of things. Now here's a disclaimer for all of you out there in the day trading world. The game is played with real money. And when it comes to real money, it's somewhat cutthroat out there. Day trading is not for everybody. It's a really tough game. One of the important aspects, I believe, of day trading is volume. Volume is your best friend, which I'll try to extrapolate a little bit on volume in a moment. I don't get distracted inside my head, which does tend to happen. Okay, so I've covered the pattern day trading account. And if you're not in a pattern day trading account, if you have $15,000 in your account, you could be on margin. They will give you 2-to-1 leverage. If you carry it past 4 o'clock, the closing East Coast time, when the markets close, they're going to charge you interest per day for however many days you're borrowing the money. So if you have $15,000 in your account, you're on margin, you could buy $30,000 of a stock. If it's $29,875 worth of stock, you buy it, and 10 minutes later you're up a few dollars or down a few dollars. You don't like it, how it's acting, and you get out of it. Your money is going to be locked up for 1 day. Trade date +1, I think, is the rule. Not sure, you got to check it. You got to do your homework. Doing your homework, it's an important thing. On anything you hear from any of the people on YouTube or whatever you're tuning into. If it comes to financial stuff with your monies, for health reasons or whatever, you best do your homework. You don't just take it as a go-to thing and you start drinking whatever it is because you think it's going to cure baldness or whatever, and then you end up horizontal, dead. Okay, so bouncing around. Let's go back to volume. Volume is, in my opinion, is a very important thing. When you look at the chart on XRP, you're going to notice, if you go back over 2 years, a year, 2 years, you look at the volume down on the bottom of that chart, the price increases have a tendency to correlate, movement correlates with volume increases. And when there's a volume increase on XRP, I think we're going to see a bit of a surge upward. All the other stuff is out there, all the fluff. This guy is going to get kicked out of the SEC, and this is going to become this. That's all great, and it all might be possible. There's also a theory out there: buy on the rumor, sell on the news. Alrighty, now when it comes to all these crypto things, I see all these masterminds out there. They've got the Fibonacci's and the Elliott waves, and they've got the cup and handle and the reverse pennant and this and that. I'm not sure if I'm buying into that, mainly for the reason that most people, sorry about that, my little stand here is very, very archaic. So I don't think all of that plays into much, because my reasoning is that not that many people are following it. It's not mainstream like the stock market. When it comes to the stock market, there's so many people out there that are following it, and it's somewhat self-fulfilling. It kind of verifies itself because of the masses that are watching the resistance level or the support level. I'm not sure if that's the case when you got 9,000 different cryptocurrencies. Now this XRP is definitely one of the top players, and as it moves, with such a large amount of them out there, it's going to move up in its total value. Of course, Bitcoin is the big player, but the average person like you and I is probably not buying Bitcoins. Okay, so let's continue. Volume is an important thing, without it, in my mind. It might not be in yours, that's fair enough. Then we come down to the cost of doing business. In the day trading world, in the stock market world, it's known as slippage. You have to overcome the slippage. If you're paying $10 per trade that you make, you have to overcome the $10 per trade to be profitable. $10 to buy, $10 to sell. Then they went to this free trades because they're making money on the spreads between the buy and the sell. Understandable. Now, on the whole crypto world, you have all these different exchanges that are out there. What's going on? Again, this is my opinion. Got to do your homework. Do your homework. Okay, so when it comes to the different exchanges in the crypto world, for now, it's unregulated. Capitalism brings out the best opportunity for the individual consumer. So, I'm thinking that down the road, as a handful of these cryptos become very mainstream, the amount of being that these crypto sites are going to charge for buying and for selling is going to become competitive. Is it yet? Not sure about that. How do you move things around from one account to another account? Not that sharp on all that either. I need to sharpen up on all this stuff. But at any rate, the cost of doing business is a very critical aspect to the bottom line. Whether it be the stock market, day trading, or whether it be cryptocurrencies, whatever it all might be. What is my cost of doing business? What's the cost to carry the trade? Very critical stuff. Okay, with all that being said, this is not financial advice. I thank you all for stopping by today. Any questions you might have, if you want to follow some of my day trading tutorials, I've got a couple out there already. I'm going to try to be adding more, because that was one of my niches in life. I spent most of my adult life day trading the world. Now, I'm not coming on here with the Rolex watch. No Rolex watch, threw it out the window many years ago. What time is it? It's either daytime or it's nighttime. That's all that really matters. So, but if you want to see a lot of fluff, sure, I could put on a show for you. That's a lot of bull. Most of what I see on here is a lot of smoke and mirrors. Smoke and mirrors. The bottom line is, do your homework. Each individual person's got to do your homework. You got to check things out. Alrighty, with all this being said, I'd like to thank you all for being here today. And hope I've touched on a couple of interesting things. The pattern day trading, leverage, slippage, the cost of doing business. As I acquire more information, knowledge is power. As I've always said, knowledge is power. The more knowledge you have, the more power you have. Alrighty. Thanks for stopping by. May all your days be winning ones. Have a great day.